Good afternoon, everyone, and welcome to the Uncensored live Q&A session. My name is Danny, and I will give you the webinar today. All right, so let's begin just by going through the structure of the webinar to understand what will happen in every step. The first part will be just going through the previous questions, and then we're going to go through these questions, as you can see, and we'll try our best to answer them. The second part will be the dynamic questions, which are questions that we receive along the webinar from the audience, from you guys, which I'll paste down here. The third slide here is more informative, just to share with you the links to save you the trouble to find it by yourself on the website. And lastly, the slide here, which presents analysis, perhaps will help us understand analysis, just the general approach. And yeah, just to help us emphasize and demonstrate. All right, and it's important to know that any capital markets and trading information disclosed in this webinar is provided for informative purposes only. It should not be constructed or applied as an investment advice, recommendation, or a suggestion. Now, a very frequent request is if it's possible to get the recording of the webinar so you guys can review it in your own time and to watch it in your own speed. And as always, I say that you can find a recording of this webinar in our YouTube channel. You can find not the recording only for this webinar, but the rest of the webinars that we have as well. The recordings are uploaded to YouTube, to our channel on YouTube. And of course, you guys may have access to enjoy them in your own pace and as many times as you need. So the first question is, how can I get assistance from my account manager, and does it cost anything? Okay, well, I can simply okay, let's think that I'm writing it a bit smaller. Okay, well, doesn't really make a difference. So senior account manager can be contacted. Account manager can be contacted via email, phone, or customer service, and the assistance that they provide doesn't cost anything as an addition. All right. Now, let's understand quickly what a senior account manager is for the people who are unaware about the service. So, of course, as a beginner or not as a beginner, as a trader, I will always have things that I would like to do along the way. And some of the things that I would like to do, I'm not sure about. And I would like to have a second opinion, perhaps. And a senior account manager is there to answer all your queries under the trading umbrella. So that means, let me just quickly get a notepad, and perhaps we can also paste the question anyway, just so we will see the answer here together. Okay, originally the question was how can I get assistance from my account manager, and does it cost anything? Okay. And as I wrote here, it doesn't cost anything as an addition. And of course, a senior account manager can be assigned after you've made a deposit. After you've made a deposit, can happen automatically, or you can access the customer service and ask for a senior account manager to be assigned. A senior account manager can assist with everything related to trading, with a single condition that it cannot suggest or provide with a specific financial advice to tell you what to do, but it can definitely assist you with constructing a trading plan, understanding a bit better the analysis, help you do risk money management, guide you through all the facility that we're seeing here, including the answers that you're going to see here today. And the senior account manager should be able to also handle those kind of questions and provide you with assistance. So we're quickly going to take that. And okay, I can just say that usually our senior account managers are very nice. How do I paste it without? Okay, let's just keep it like this. Okay, second question is, after opening a position, should I keep monitoring or leave the chart? All right. This is actually this is a very good question. This is a very good question, and I would like to see you guys' opinion about this. When you open a position, okay, let's suppose I have a position here. I'll change it to half a lot. I click here and I buy this Aussie versus yen. Okay, what do you usually do, guys? Do you step away from the chart, go do something else while the position is running, or you're staying by the chart, monitoring, perhaps keep watching the position? What do you usually do? You step away, or you stay on the chart and keep watching the position? And also, what do you think that is would you recommend to do? To step away or to keep watching it? Not always keep watching it. Okay, thank you, Tom. So, Tom, you're saying that sometimes you watch it and sometimes you leave the chart. Okay. What else? Anybody else thinks differently? After opening a position, should we keep watching it? Should we walk away? It depends if you got free time. All right. Thank you, Abby. If you got free time, so stay. All right. That's also it's also something to think about. If I have a lot of free time, maybe I want to spend time watching my positions, and if I'm occupied, I'll walk away. All right. It's also an opinion. But what is more preferred? Do I get what the advantage? What prize do I have? Do I have from keep watching? Let's think about it for a moment, right? The positions, right? What price do I have? At the moment I have a position, it's either going up or down. Of course, if I'll keep watching it as soon as I took it, so of course the impact doesn't have to be too big because the market didn't move a lot. What do you think? Do we have any price? Do we have any control on the market? If I'll keep watching my position, now it's losing. Can I turn it to a winning position? Not really, right? If I walk away, so I won't monitor the position, and then if I lose too much, I won't be able to stop it. So this is also dangerous. But if I set the stop loss, right? Let's look at the scenario we have here. Actually, this is the default instrument. I'd rather take something more interesting. Let's go maybe with one of the indices we saw this morning. It was interesting. Okay. Maybe the Dow Jones will recover, who knows? All right, so let's suppose that I have a position with something. I took as an example Dow Jones, and let's suppose that I have a position, it goes up, wonderful. If it goes down and I'm watching it going down, okay, the advantage, so-called advantage that I have watching a position, if I haven't set the stop loss, the biggest advantage is I can always close it and cut my loss. If I'll walk away from my position and I won't monitor it, and I don't have a stop loss, I might come back to a disaster, right? So this is something I need to understand. But if I put a stop loss and I walk away, so basically, what advantage do I get from keep watching the position? Maybe just educational, right? Or maybe if I would like to hedge, could be, all right? But in fact, if you're asking my personal opinion if I should stay and watch the position or not, I would personally say that that depends on your trading style. Okay, what do I mean by that? Okay, just a second, I'll simplify this. Okay, I'm not gonna write multiple positions because sometimes it could be open, close, but phase-based trading, that's enough. Short-term positions. I don't want to, again, some people may say, yeah, it's a short trading session. Not necessarily. I can take a lot of positions and my session could be 2-3 hours. So we cannot say that. We can say it's a short-term position. In intraday, so medium pace trading, and let's say a day to a week position duration. Now again, this is not a formula. Some may say, listen, I do intraday and I hold it for a week and 1 day. Okay, no problem. Right? So it's not very flexible. Swing, of course, we understand long term. So this is long term trading. A week, well, a week I wouldn't really consider swing, but let's say maybe a week plus 2 months or more. Okay, let's put it this way. Now, naturally, if I'm scalping, of course, I have to keep monitoring the chart because this is what technique is all about. If I'm scalping, I do fast-paced trading, I go for short-term, maybe even minutely candles, and I'm gonna go for, in this case, perhaps a sell for reversal, and if it goes down, then a buy, or I can go with the trend and go with a buy, and then I can close or take another buy. But the point here is this is phase-based trading, and I have to be by the computer because this is what I do when I scalp, right? From the other end, if I look at intraday and I have positions planned with pending orders and I'm planning to hold it for a day or even more, so again, I'm not going to sit the whole day and watch my position. That's just insane. And again, we spoke about the advantage and the disadvantage. If I have pending orders and I've already designed and analyzed everything that I want to do, I'm not specifically there is a question here. Why do not manage stop loss on recommendation of your associates to us? Because I am close. Okay. Ruben, you will have to specify. First of all, thank you for the question, but this is very blurry. Can you maybe specify the question? I'm not sure that I understand it. That's all. So like I said, if I do scalp, I have to be by the computer because perhaps in a minute I'm gonna close this position and open a new one, right? Or maybe even have a new one in a minute anyway. So I need to be by the computer. But if I do intraday or weekly, and then my position is already planned, I have all the take profit and stop loss and everything I need is already designed in a way that suits me. So I don't have to, I can, if I want, and like Abby wrote here, if I have free time and I want to stay by the chart and I enjoy watching the chart, I can. But if I have to, no, absolutely not. Okay, I don't have to do that. And just a second. Let's maybe increase it just a little bit to make it more interesting, right? Okay, and like I said, the advantage and the disadvantage are also time depending, and to stay by the chart or not is my decision entirely. Okay, let's make it this way, and then we have a flat 1,000 in here, just got down 1,000, and again we're looking at the same. Okay, so if I have everything set like this, I can just take the position and walk from the chart. Okay, I can do this. I don't have to, but I don't have to stay on the chart as well. So this question is very open. And like we said, swing, of course, if I'm holding a position for a year, there is no chance that somebody is going to sit by the computer or on their phone for a year, right? I mean, you can, but then you need a lot of free time. Anyways, you guys understand the point. We have a choice. We can stay on the chart or leave the chart. That's also time depending. That's also depending on the strategy, on the trading style, and what is really our purpose when we are after we took the position. Do we want to keep doing more analysis on the instrument? Are we done with the session? Okay, so this is very often. Okay, so to answer this, depending on the trading style, time availability, and let's say further analysis, we can choose if to stay on the chart or not. Planning a position with pending orders can assist and save time not watching the chart. I don't want to write it down because, again, even with pending orders, I can keep watching the chart. But if I have the pending orders, then I don't have to because I know that it's automated. So I'm going to leave it as it is. I'm going to take the answer, just paste it down here. Okay. All right. But we probably want this to be the same size as the upper ones, so just like that. How much margin should I use per position? That's another excellent question, which again depends on the strategy. Why? Why, Danny? Why you keep saying this? Why everything is depending on a strategy? I'll explain to you guys in a moment. Just a second. Let's pick. I think gold is consolidated this morning, so maybe we can. Okay, that's a nice recovery. All right, so I took gold, and as the question asked, we have a question now. How much margin should I use per position? Okay, but how many positions am I planning to take? And how much margin each position do I need for every position? So how can I answer this question before I know those things? Okay, so I took this as an example. And currently, if I'm looking at gold, it seems like gold, as you guys saw, is recovering quite nicely. Okay, and we can assume that I want to take only two positions, one with gold, one with another instrument that I will choose. Okay, and we will see how much margin this will be out of my total margin. Okay, so at the moment I have no positions open. We can all see my free margin is equivalent to my balance in equity. Okay, and this position with gold, which is 0.120 ounces, it seems like the necessary margin is 2,600. Let's quickly understand why though. Why this is the number that we see. As we can see, the price for 1 ounce in US dollars is 2,600, right? 2,613. So we're going to write it down like this, and then we'll multiply this by the amount of units. So price per unit times amount of units, okay, which is 20, equals this, okay, equals value, okay, which is the value of 52,200. Okay, if I would like to confirm, of course, since we're using the web trader, we don't have to do this calculation manually, but because this is a webinar and we're learning, let's be precise about that. Okay, so we get the value automatically in our platform. But if I be using MT4 or MT5, I should have done this calculation to know what value and margin I need. Okay, and now, as you can see, there is something here called leverage. Leverage is 1 to 20, and it multiplies buying and selling. Okay, and because it multiplies my ability hypothetically by 20, so if I multiply it by 20, I can just divide my value by the leverage. And if I'll quickly go to here, to the instrument details, I can also confirm and see that the margin is 5% for this instrument. How so? Because if I will divide 100 by the leverage, the result will be 5. So I can divide whatever leverage I have, I can divide 100 by that number, and then I know the remaining percentage is actually my margin requirement. Okay, so 5% is 2,613, and again, if we would like to confirm that, we can simply divide that number by 20, and that we get the margin impact. Okay, so we have value divided by leverage equals margin impact, which is the necessary amount to open the position, right? So this is what I actually need. Now, if this is what I need, and let's suppose that I'm going to write the position here, okay, gold, okay, 0.2, buy type, 2.6 out of a valuable 10, right? Okay, how much margin? But this is not a percentage, right? This question is very, very general, but I'll try and direct it as in a way that makes sense. So if this is my position, and I'm using 2,600 out of 10, so we can say this is roughly 26%, right? Let's assume we take another position with, let's also, okay, we have oil here. You know, oil is not bad. Let's also think of a position with oil. The leverage here is 1 to 10. No problem. Are we also looking at days? Okay, we are. Oil is a bit different, so we can try 0.2 as well. Okay, let's extend it, 0.4. Okay, there we go. And the same exact way, we have the value here, which is a result of the amount of units versus the units that we have. So again, if I'll take the amount per unit, 69.8, and I'll multiply that by 400, we do get the value right away. And if I will again divide this value by 10, we see immediately that this is the margin impact. So crude oil, let's write like this, crude oil, okay, again, oh sorry, this is 0.4, this is also a buy type, this is 2.791, we could even call it 2.8, but okay. And then we see that this is nearly 28%, right? Okay. Now, so far, if I will combine both positions' necessary margin, we have a usage of 53.9%, right? This is the total here. Okay. So what do you think, guys? Should I take another position under this circumstances? Another position, either gold or crude oil, or in similar value in terms of leverage and margin. My chart is showing AUDJPY. Oh, okay, that's very bad. I don't know why it's not showing you the chart. Let's try share it again. Kim. Okay, Kim, please reply if it was fixed. I hope that everybody else see my chart. Can somebody else please confirm that you can see the chart here? So God forbid I'm not it doesn't show the presentation or something like that. Can everybody else see the chart here? Okay, I really hope that we don't have an issue with the chart. And of course, I hope that the sound and everything else works properly. All right, so the purpose of this exercise and the answer that I'm showing to this question is the amount of margin that I want to use is depending on the amount of positions that I take, and it also depends on the value that I take. So for instance, if I'll add another position with the same margin requirement, I'm already going to be at, let's see, okay, if I take another position like oil, or even if I'll take another position like gold, okay, still I'll be in a considerable percentage out of my margin. Okay, can you guys think of a reason why not to use a big percentage of my margin? Why do I need to leave additional margin unused in my account? Okay, what reason do I have to leave additional margin in my account? Why not to use everything? Because if I use everything, maybe I'll make money, right? Why should I keep some margin available? Because if you lose, you get dropped out. All right. So I'll share, Mike, I will share your answer. So Mike, you said if you don't have enough, you will get dropped, right? If you lose, you get dropped. Uh, all right, which is an interesting interpretation. But your answer is correct. When I don't have enough margin to sustain the positions, and one of these positions went sideways, and I, God forbid, start losing, I want this additional margin to keep my account alive and to defibrillate the positions, right? To sustain the positions. If I am at what we call a margin call and I can't maintain my margin level, I can either add more funds and then maintain to add more margin so I can maintain my margin, or I can close other positions and to free up margin for me to decide. Okay, but I do need to, in case that I do want to keep the position open, I do need to maintain a certain level depending on my leverage. So the question here is quite correct, and I do need to think of how many positions I'm taking, how big the positions are, how many they are. If it's only those two positions and I'm at 53%, maybe I'm good with that. Some people don't like to use more than 10%. Some people don't like to use more than 20%. Some people use 90%. Okay, it's all great. But we should be able to have we should be able to manage. Okay, just take this to consideration. So how much margin should I use per position? Okay, how do we answer to that? So we can say, depending on how many positions, how big they are, and how much margin I would like to keep available. Okay. Of course, if I'm taking 0.01 with a very low value instrument, and I am with 10,000, and I'm using a very small percentage out of my margin, the rest of my margin can stay free as long as I don't lose on the position, and I can keep taking more positions. But if I use everything, like I said, and I, God forbid, one of my positions need margin that I don't have, and I drop below the margin requirement, the market will just close, the platform will just close my position. Okay, that's just how it works. So it's good to always monitor and manage the margin. What is the most important thing in a trading session? Okay, well, it's a question that I didn't see for a long time. What's the most the most important thing in trading? Yeah. Of course, it's very subjective. There is no most important thing. But you know what? I'd say the most important thing in a trading session is you, right? It's me. The most important thing in a trading session is what we want to achieve in the trading session that we have. Is it profits? Are we, this trading session, is it about profits? Am I sitting by the computer now, or I'm holding the phone, I'm trading to make profits? Or am I doing now analysis? Maybe the trading session is about analysis, or maybe it's just educational. Maybe I'm doing a research on an instrument that I like, right? And I'm not even planning to trade now. I'm just watching the instrument and I want to see how it goes so I can read about it more. Okay, so in a trading session, I think that the most important thing is really the trader and not the market. And just to think what we are trying to achieve. What is this trading session is about? Is it maybe to improve the plan, maybe to do something else? It doesn't always have to be about taking a position right here, right now. We can think about what we're trying to achieve, and that's, to me at least, that's the most important thing. Sometimes I just enjoy watching the the news and the chart, right? But if my intention is to make money, I need a trading session to be maybe as specific as I can, and I need to use the analysis that I have acquired, and so on and so on. But I think the most important thing is me, is you, is the trader, and to enjoy the experience, and to enjoy the trading session. I think it's also important to come in the right state of mind and not to make impulsive decisions before doing at least some kind of analysis, just to understand where we are. But that's, again, my personal opinion. Some may say, listen, I like to just jump on the chart and randomly, All right, so everybody can enjoy this experience in their own way. I think the most important thing is, again, it's purely my personal opinion, to think what I like to achieve from the current trading session. Okay, like I said, could be educational, could be analysis, could be risk money management, really anything you want to specify about. And yeah, okay, so like I said, on the third slide, we have here some links we're going to share with you. So I'm just going to share it with you on the chat. Okay, if I can just, there we go. Okay, so I've sent the first link. The first link is for additional education. If I'll click here, it will send me to our educational section. I'm going to show you in a moment how to access this from the website, but it's also good to have this in case you're using a different interface. Maybe I should have showed you the, okay, in a moment I'll go back and I'll show it to you from the website as well. This is the FAQ in the Health Center. This is for a real account. So if you're still with a demo and you want to get down to business, this is the real account link. This is for the academy. Don't worry, I'm going to show it to you. I'm going to show you how to access the academy from the website as well. So let's quickly just do that. And in the meantime, because when I do this at the end, people complain that they don't have time to copy and paste this. And I understand. So I'm doing this now so you guys can copy and paste it before the webinar finishes. And we have here the Q&A benefit, which is a special promotion code to give you guys to give to your senior account manager and to receive one-on-one premium market review. All right, now, usually the interface looks like this. Let's jump back to the full screen. You can do this simply by clicking here on AvaTrade. To the left-hand side, we have all this kind of nice icons with all kind of things. Here, the trading platform, and underneath, after this blank segment here, we have education tab, which opened. And if I'll click here on the academy, it will send me to the academy. And if I'll click here on tutorials, it will open me the tutorials. And I can go through these tutorials and choose which subject I would like to enjoy. Oh, thing that I accidentally closed it. Sorry. Okay, which subject I want? Maybe overnight fee. Okay, if I'll click on here and I'll click play, it will start showing me the video for overnight fee right away. Very, very nice and informative. Like I said, the interface here is called the Web Trader. This is the desktop version. I recommend all the educational content is something that I personally think that you guys will enjoy much, much more looking at the computer and not on the phone. You can still do it on the phone. It's not that you can't, but you have to agree with me that looking at something small in your hand is not comparable with looking at the wide screen and enjoy the whole video properly. Maybe also compare it with a chart. Yeah, I guess it makes sense. So this is what I'm showing you here today, guys. Before we say goodbye, if there's anything that I said that is not understood, or you would just like to share with me another question, I mean, we still do have another few minutes. So you are welcome to use the question section, and I'm happy to answer if I can. All right, it seems like we don't have any more questions. So I would like to, oh, we have a question here. You trade every day? No, Tom, I am not trading every day. It's not a bad thing to trade every day. If you would like to trade every day, you're welcome. I'm sure that people does that and people trade every day, but personally, no, I don't trade every day. Sometimes I do, but in my strategy, no. Okay, I hope it helped. Yeah, other than that, like I said, guys, thank you all for coming and joining us today. I hope that you've learned at least one thing from this webinar, this Uncensored live Q&A session. Like I said, I was Danny. Thank you all for joining us. I wish you all, whoever is celebrating, Happy New Year and happy holidays. You are welcome to join us in a week time to the next webinar. Until then, you can review the recording in our YouTube channel. And I wish you all best of luck with trading. Have a good week and have a wonderful day.